Hello, everyone. My name is Gregory Schnese, and let's talk about Bitcoin Borrow Die. Bitcoin Borrow Die is powered by BitStack. I've made a bunch of changes and updates to this site recently. Just wanted to show them off real quickly. How you can build wealth in Bitcoin terms. Get started for a free week. We have portfolio tracking, everything you need to optimize your stack. It'll help you with your portfolio construction, loan and risk management, AI-powered advisor, and then goal and trend forecasting. So check it out at trybitstack.com. For today's topic, we're going to take a step back and think about what happens when the plan works. What do the numbers look like? And how can we continue to borrow money tax-free and roll the loans forward while maintaining low and conservative LTVs? So looking at the market and kind of where we stand right now, we're right around the 200-week moving average, about $63,000 per Bitcoin. We're in the middle of summer. There's not a whole lot of action. People are going nuts about BIP 110 and other silly things like that. And Bitcoin's pretty much dead at 63,000. So if this is looking like the floor, what do things look like when we kind of move up from here? And the big danger of a market move up higher is not the market, it's you. So if we look at a $20,000 loan against a 1 Bitcoin stack for collateral, this gives us about a 33% LTV, which would require about a 60% drop in Bitcoin to liquidate the LTV. So a 60% drop from here brings us to like 28,000. So I recommend LTVs lower, maybe in like the 10 to 20% range. But even at 33% here, especially given the prices and where we are in the market, a 60% drop is unlikely. And then as Bitcoin appreciates and goes back up, if we start to hit roughly all-time highs again at about $120,000, that $20,000 loan against the 1 Bitcoin drops from 33% LTV to about 17%. So the loan is de-risking itself because the price of the collateral is increasing. At $250,000 Bitcoin, we're at about 8%, and $500,000 Bitcoin, we're at about 4% LTV. So at this point, you kind of need to start to think, what is your LTV range? What are you comfortable with? So like, let's say that 10% is the number that you want to look at. As Bitcoin gets to that $250,000 range, there's liquidity, or there's potential to take this 8% LTV back up to 10%. So you would increase or take out more loan against your collateral because it's appreciated so much. And then at $500,000, your LTV would be down to about 4%. So you could take out more of a loan to bring this back up to around the 10% range. So as your collateral increases, you can keep the same LTV, so you're not taking on additional risk while taking on more of the loan, bringing in more of the income that is tax-free. So how this looks, kind of stacking them up against each other here. So again, at $62,000 price per Bitcoin, if we keep a 10% LTV across all of these scenarios, we can take out $6,200 as a loan. This is 10% of the collateral. This is a very conservative LTV. It would take a really huge drawdown to get anywhere near a margin call or any type of liquidation. But let's say we want to keep this 10% LTV over time. We like this number. We feel good about it. What happens when Bitcoin works, right? Like when it appreciates, when the number continues to keep growing, right? So we'll maintain our 10% LTV in all of these scenarios. If Bitcoin moves from 62,000 to 120,000, now our LTV at 10% can be 12 grand. So we can take out basically another 6 grand from the loan to maintain an LTV of 10%. So because the collateral, because Bitcoin has gone up in price, we have more loan available to us. Bitcoin goes to $250,000 a coin. Again, about 13 grand more becomes available. And then from 250 to 500, about 25 grand becomes more available. This is with the same collateral. This is with the same LTV. And this is a great strategy to keep in mind. So we're keeping a very conservative LTV across all of these scenarios, but the price of Bitcoin is just going up, which is giving us more opportunity to take out loan. You won't have to, but it's just if we wanted to keep this 10% LTV across time, across these scenarios, we could take out an additional loan. If we do it at $250,000 and Bitcoin starts to go back down the other way, our LTV would increase, and then we wouldn't do anything until the price came back. Or you could add additional collateral. You could pay it off if you needed to. But again, at a 10% LTV, it's extremely conservative. This is showing the same numbers here, just kind of in table format. I would not really recommend 30% or 40% LTVs. These are already getting high. We would only want to be in these sort of scenarios if we took out a loan at 10% LTV and then the price dropped considerably. Because with a 10% LTV, we're giving ourselves a lot of buffer. 30% and 40% is still nowhere near a margin call or anything really to worry about. But we don't necessarily want to start here per se. So this kind of brings up a few different questions about market timing, when to do this, how does price move, and things like that. So I think looking at the Bitcoin power law here is a good way to help you with an input for timing, for when to consider expanding a loan, to kind of look at that LTV over time. So let's say we had a loan that we took out at like here. Let's say it's at $60,000. We take out a $6,000 loan. Imagine Bitcoin's $120,000 now. Our question is, we see that we have potentially $6,000 more available to us to maintain that 10% LTV. Is now a good time to actually do that? Should we move forward with this strategy or not? Like, if Bitcoin just wicks up to 120 grand for like 1 second, that is not a great time to say, oh, look, I can take out more on my loan and maintain the 10%, and then your collateral drops. Like, that's not super helpful. So one thing to kind of look at is the power law here, where the short version of this is the band in the red is when Bitcoin is overpriced from the power law model, and then in purple is when it's underpriced. So basically, if we were in this scenario where Bitcoin's $120,000 now, we had this loan, and we were considering taking out 6 grand more, would it be a good time? Since we're pretty deep in this purple area, it would be a reasonable time to add on to the loan. Why? Because, well, Bitcoin can always go lower. It's historically well in this purple zone. It's harder for it to go lower, there's more upside potential. We're coming down to the bottom way more likely than we're shooting up or wicking up to the top. So it's likely our collateral will maintain these levels or appreciate over time, which will further de-risk the loan. So taking on the additional loan to bring us back to our hypothetical 10% LTV while we're in the purple is a pretty safe and conservative model to move forward with. If the numbers, like if the price of Bitcoin were like way up here, we probably wouldn't want to do that. We definitely wouldn't want to do that. We would want to wait some time for it to kind of come back into like the yellow or green or something like that, just so that we have confidence in the price, because we don't want to take on additional loan when there's like potential for the value of the collateral to be decreasing rapidly. Like if we like really shoot up into the red, it's hard to stay there. You take out a big loan or you do your thing and then the price starts to come back down. That's not ideal. What is much better is to be in this purple zone. Your collateral has still appreciated, so you have a gap between where your actual LTV is and your target. So if we had a loan that was like 6% LTV, we're in this zone, we want to keep it around 10% LTV, you could definitely take out enough loan to bring you back up to that 10%, given us in this deep purple area where the upside is much more likely in price than the downside, so that the collateral of the loan grows, and then that LTV will probably continue to come back down. So a few rules, a few ways to look at this. Again, pick your LTV ceiling. Don't raise it. 10%, 20%. These are comfortable numbers. I would not recommend going above that. Borrow only a fraction of new capacity. This is not a full stack play. Like, pick a portion of your stack that you can use to borrow against, because if things don't go the way you want them to, you need to be able to service a loan or add more collateral. And if you ain't got money coming in to service the loan, and if you ain't got collateral, that's how you get yourself in trouble. So you always want to be able to service that. Use ratchet rules. Increase borrowing only after price has sustained a new level. Never after spike. This is what we were just talking about with the power law. Be in the purple, blue, green zone. Make sure the price is hung out in like a range for a little bit at least, so that you're comfortable making it. Don't do these just on spikes or dramatic ups or downs in the market. Keep a top-up reserve. We already touched on that. Unused capacity is optionality, not income. So if you don't need this optional capacity as income coming in or to pay bills, it's optional. Like, you can have this as like a Bitcoin loan of credit. You can have it as funds to tap into in the future if you need to. If you don't use it, you don't have to pay interest on it, which is nice. So it's not like something you have to spend. It's just like you could expand your loans to hit that LTV ceiling if you need the extra money, and this is one strategy to do that. And then, of course, choose your custodian and your third parties carefully. Make sure you use somebody who's not going to rehypothecate. The whole point of these strategies is to be able to monetize and get value out of the Bitcoin asset without selling it, without bringing on tax liability. But if your third party, botches something up or loses a coin or something silly like that happens, you'd be in trouble. So just, make sure you look at third parties carefully. And then really one of the main keys here, patience on the way up, patience on the way down. As Bitcoin continues to appreciate from here, the LTVs of your current loans will decrease over time. If they fall under your LTV target, that's an option. There's additional capacity there for expanding your loan if needed. And always feel free to run your own numbers. Visit us at bitcoinborrowdie.com and try bitstack.com. And I will see you in the next video.